thanks for joining us again today. This is another crypto conversation with Going Elliptic. Before we jump in, just want to say thanks everyone that's jumping in on the live stream, or if you're following through with the recording. One of the key things here is this is educational. It's not investment advice, and we really, really want you to learn something. So if you are finding anything useful, give it a thumbs up or drop a comment. That's how we know more of the content that you want to hear. My name is Paul, and you may have seen our first conversation, which was with Bharat Rao, the founder of Leverage.io. If you haven't, that's a really good first one for jumping in. Anyone who's trading crypto perpetuals. Hey, Shanky, how are you today?
Doing well. Yeah, absolutely. It's exciting that this is episode 2. Last week was the first one. I personally feel it's always the start. You have to get things started, and it was great that we did a couple of episodes last weekend. I think it was well received, and we are hoping to just build more content, as you're saying. So a couple of things here, just sort of chiming in on what Paul already said, adding in everything here is educational. We want to bring a lot of good content for you. That is the whole idea of putting this together in the first place. Just lots of great discussions, lots of great people, and lots of great ideas. Nothing, just absolutely nothing here is investment advice or any kind of tax advice or monetary advice. So don't consider it in that light. Just think of this as good, nice information that you can use in whatever way that hopefully helps you provide greater perspective about things that are happening. There's a lot of exciting stuff going on. So let me quickly,
Yeah, who are we going to talk to today?
That's true. Yeah, that's the key piece. We've got an excellent guest today. Before that, just one quick piece. You probably heard about us. You know us at least from the last episode. If not, we are again folks who are enjoying not just the sort of the markets aspect of it, of the trading, but we also love technology. And as we wrap this show up today, you will also hear about the technology-centric pieces that we're going to bring out. With that said, let me jump right in and introduce our very awesome guest. So today we have with us somebody who's very well known in the crypto trading community, but otherwise has been sort of media shy in some sense. You don't see him normally in many talk shows and things of that nature, but of course, he's quite a voice, quite a movement in the crypto trading sphere. So he goes by the name of Swapman, incredibly smart guy. As I like to call it, he's one of the OGs and been around almost from the beginning. And we will talk to him today and hear his story.
Hey guys, thanks a lot for having me. Great to be on. And yeah, like you said, I'm not normally on shows, but I have made an exception for you guys because I know you guys are producing quality content. So happy to be here.
Excellent, and we love that. So Swap, I think the best way to kick this off, maybe with just the idea of you've been around for a long time. As I mentioned, you've been an OG. Tell us a little bit about your journey, and also just highlight for our listeners what has been like the most fascinating things, what has been most frustrating, and how the landscape's been evolving over the last few years.
Yeah, wow. I could talk for hours about this alone because it's been a really long journey for me. I've basically been around in Bitcoin where I actually accepted and supported Bitcoin since 2011. I heard about it though on IRC, on Freenode. I was a moderator for the Pound Economics channel there, and there was a lot of people talking about Bitcoin, and I hated it at the beginning. I thought this can't possibly be something that works. This can't possibly be the future because if you could just create Bitcoin out of nothing, surely you can create more Bitcoins out of nothing, and there's nothing special about that. So I was actually against it in a period in the beginning. It didn't click for me until 2011 when WikiLeaks, which had accepted Bitcoin as payment, but there weren't that many people donating to them in Bitcoin. And then there was basically a blockade by Visa and the international banks to prevent people from donating to WikiLeaks. And I've always been very open source friendly and very much aligned with the cypherpunks like Julian Assange and others, like Richard Stallman and those guys. So once I saw that basically WikiLeaks was able to use Bitcoin as a way to get around these blockades by the traditional financial system, it really started to click for me that, like, okay, this is actually something that has use, this permissionless way to transfer value. And I think in the beginning, I didn't respect it because it didn't have much value. But once it actually had a market price and it was something that was usable in the context of WikiLeaks and certain other applications, then I became basically obsessed with it. And I was working in, I had studied econometrics myself, and worked in various different firms related to like consulting and banking. And so what I was doing basically was my day job during the day, and then I was just reading a lot about Bitcoin and trying to figure out like what can I do within Bitcoin, and what's the best play really with Bitcoin other than just buying it and holding it. So I basically was learning a lot about derivatives just in my normal job. I was learning about the power of being able to really like customize your exposure. Like as long as you had some kind of asset of some value, you could basically manage whether you were going to be bullish or bearish on some kind of asset. And through the power of derivatives, namely futures, options, and swaps, like you could basically, and as long as you had counterparties on either side, you could basically get exposure to whatever you wanted. So around 2014, I started to trade the first real Bitcoin futures products, which were run by Bits VC at the time, and also OKCoin. These were like the first real Bitcoin futures. And it was, and I say real because there were some attempts to do similar markets before by this. A lot of people might remember this guy from Romania in 2012, 2013. This MP, the really scammy kind of like offering. But so that's why I said when I say the first real Bitcoin futures, I'm referring to like BitVC and OKCoin in 2014. Where you had a proper order book, and there was essentially like a pari-mutuel style betting product where you could say, add Bitcoin to your account, and then you could say, I think Bitcoin's going to go up. Other people say, I think Bitcoin's going to go down. The winners are basically making money from the losers. It's just like if you go to the horse races or somewhere, that it's just, certain amount of people are putting money in the pool, and then you have equal exposure on either side. The winners take from the losers. So it was sort of like fair in that regard. But it was very sloppy as well, because they had to rely on socialized losses, where basically every week you would have to, when someone got liquidated, because you could trade up to like 20 times leverage. So if you have one Bitcoin, so one Bitcoin you could lever up and trade 20 Bitcoin. The problem was that if someone got liquidated, you would then have to find a counterparty on the other side. And if the order books were too thin, then this liquidation order would just sort of hang out in the book for ages. And so just to rewind a bit. So in 2013, and early 2014, there was basically like an epidemic of scams and hacks and stuff going on in the community. I think that's one of the things that's plagued Bitcoin and cryptocurrency for ages. And so I really got active in the community in general. So I mentioned before IRC and hanging out with different traders on IRC, and then sort of moving that into the various forums. And then that's around 2014 was when I made I got more serious about organizing traders into a community so that we could pressure exchanges who are acting scammy, and we could sort of be like a lobby against practices that exchanges were doing. And we would create like there are many old names for the community, but one was so we're at the moment we're Whale Pool, so people can go to whalepool.io. There's at any time like 200 traders on TeamSpeak that are chatting about trading all kinds of stuff, not just Bitcoin, but all kinds of various crypto projects that are of interest to them. But we would basically have different exchange owners come on to interview them and to sort of grill them about how reliable are your systems, and sort of examine how much they understood what was going on, because that's the best sign of an exchange that's not in good shape is if leaders from their exchange can't really talk about the product in a clear way, or they don't have good explanations for technical failures that the traders observe. So that's something that, so ever since about 2013, I've been really spending a lot of time organizing people in the community, whether it's on Telegram, TeamSpeak, and basically trying to set up different ways that we could argue against exchanges that were not behaving as well as they probably should and weren't being transparent. So that's something that was extremely problematic back in the day, and it was sort of like fascinating to me that in an industry that was growing so fast, there was not that much accountability. We were sort of stuck holding these big, basically like billion-dollar companies. We were having to hold them accountable by ourselves. And that was sort of like the crypto ethos, was like, you're not going to have regulators you can rely upon or anything like that. You kind of have to take care of yourself. And that's like, if you lose your keys, then you're screwed. Too bad for you. And similarly, if you're a trader and you're trading on different exchanges, then it's up to you to do your due diligence. So we tried to basically organize as a community to make that more effective and to pool that knowledge of like, oh, don't trade on that exchange is a scam. Yeah, you can trade on this exchange, it's kind of scammy, but overall it's they treat you fairly. And then there's other exchanges where maybe you'll be like, oh yeah, that's definitely an exchange that we can trust, and they aren't going to scam you or steal your money or anything like that. So yeah, but that was the journey up until like 2014, where I started to actually get so serious about Bitcoin and helping to design and develop, implement, to market make futures in Bitcoin. That I started to do this like more seriously as like full time instead of doing my normal day job stuff. So yeah, around that time, I was mostly like advising, working with different centralized exchanges about how to implement these things. But I got more frustrated about the fact that we were relying upon centralized exchanges that were holding the Bitcoin that people were trading. And it just felt like we weren't really living up to our crypto ethos in a way, because it's cool. Like the reason why I was so fascinated with the Bitcoin futures was that you could hold Bitcoin and only Bitcoin, and then you could earn more Bitcoin by taking long or short positions to manage your risk. So like this was always the most fascinating aspect to me, was you could stay in Bitcoin 100%. But really, what's the point if you're still ending up having to deposit all your Bitcoin with a centralized exchange? It's not the best. It's not the best way to really protect yourself. The best way is to have a proper decentralized exchange. That was always the holy grail, was let's have a totally decentralized exchange where you don't have to trust anybody. You don't have any central intermediary that is essentially a middleman that you have to trust in order to conduct trades with other participants in the market. And the other important thing is the UX, because it's easy enough to create like a really decentralized product. But if you don't have the liquidity and the ability to trade in an order book and very immediately get in and out of trades, then it kind of also defeats the purpose. So so that was always something that I was really hoping to be able to contribute to, the ability to have not just a decentralized exchange for derivatives, but to have one that felt and acted like a centralized exchange. So that was always the holy grail for me. So yeah, I would say, just to sum up on the journey, because I mean, I guess that takes us up to most recently. But yeah, I would say that the most fascinating is that we were able to grow so much in the industry without there being any proper like accountability, that the community basically had to like self-regulate the different exchanges. And most frustrating to me has been like that scams and hacks, like, still today are a huge problem in crypto.
Yeah, that's fascinating. That's like a 10-year span there. So thank you for kind of talking us through that. And I guess that leads into the next question, that instruments have really evolved a lot in that time. Like you said, the first kind of Bitcoin futures had a lot of downsides. But it still seems that in the crypto space, perpetuals are the darling. What makes perpetuals so special, and what do you like about them?
Yeah, so the downside of what I guess we could call traditional futures is that, and this is what was trading on BitVC and OKCoin, you would have weekly and bi-weekly futures, which would just behave like a normal futures contract, in the sense that there will be a maturity date, and once the date has been reached, then it expired, and so all the open interest that would exist for the contract would be settled at some underlying index price, which is fine. But what if you're somebody that wants to be long Bitcoin for a month? Then you would have to like basically roll your position, is what it's called. Like if you're in the weekly contract and you want to stay long, you would have to basically slowly build up a long position in the next front contract in order to maintain that long position, which is just a pain in the ass to deal with. It's much more convenient if you just have a single contract which never expires, which is what the perpetual contract is. And then you can maintain your long exposure or short exposure as long as you want to be. You don't have to think about that expiration is coming, or any angles like that. The only thing that you really need to worry about, of course, is the fluctuation in the funding rate. So you're exchanging what's essentially a fixed premium or discount when you're on a normal futures contract with a variable premium or discount, because you're going to either receive funding or you're going to get hit with funding as you're holding the perpetual contract. So that's really what makes it special, and I think it's a great contract. It's a great instrument in general. It's probably most similar for people who have traded CFDs. It's very much like a CFD contract. CFDs don't expire. You can stay long or short on the Forex or S&P index or whatever, and then there's some kind of funding rate which occurs. The thing is with perpetuals is that you're not like trading against the broker. You're trading against other traders. So there's still the same structure as futures, where one guy goes long one Bitcoin or ETH, one guy goes short one ETH, and then you have open interest that exists of one ETH, and there's always one trader on the other side that you can manage the risk for. Whereas if you're on a CFD getting the similar exposure, then you're trading against the broker, right? Yeah, I mean, so that's, I would say it's not as special as people make it out to be. A lot of people think like, oh, BitMEX was so amazing that they invented this perpetual swap, but it's not really true that they invented it. It's something that has been around in various forms, and it took them a while to figure out that you could just basically let the market set the rate which is paid on it. There's a whole story I could tell about how BitMEX actually got to the point of where they had the perpetual contract, where they actually had, for a while, they had 24-hour contracts and 48-hour contracts. And then they had a roll calendar, it was called a calendar spread contract, where you basically could roll from the 24-hour to the 48, so that you could basically mimic continuously having a position, because they didn't trust the idea that the market could properly set the interest rate, which is set for funding. So it was a long time until they actually ended up fully going with what the current understanding of what the perpetual contract is.
Right. Yeah, this is just a fascinating space at large, and I think you're right. The perpetuals per se certainly builds off what has existed in the fiat world and just makes it convenient in a crypto sort of ecosystem, if you may, where you don't have these sort of centralized agencies doing settlement and all other kinds of complexities that come with managing derivatives. What I would like to ask you, Swap, is from a standpoint of your own trading strategy, how big is derivatives? What role does it play, and what have you seen broadly in terms of the crypto trading community? Tell us a bit more there.
Yeah, no, that's so for me personally, it's a huge part of my trading strategy because of the capital efficiency angle of it. I am able to use leverage as a tool to maintain either a significant long position, or I could hedge the amount of Bitcoin or Ether that I have, just by, I could take a percentage of my money to risk it on an exchange, or to put it on a more decentralized exchange like leverage, where it's all on chain and verifiable on smart contracts, so it's much more safe. But it's still, the key here is capital efficiency. So whether or not you trust the exchange, or whether you're using the trustless exchange like leverage, you at least don't have to send as much of your money on there. You can just sort of like hold on to your money otherwise, move 10% over on it, and then leverage up 10x, 5x, however much you want. And you can actually manage, like maybe you're feeling like you should sell some of your ETH, which I think is not the best idea at the moment, but we can talk about that later. But maybe you felt like you needed to sell some ETH. Well, you could move either ETH or move some Tether over in order to basically take a short position on Ether dollar, such that you basically maintain the same exposure as if you had sold your ETH. And then you don't have to actually, there's some, I know you guys said at the beginning, there's no investment advice, tax advice, but normally if you sold your ETH in most jurisdictions, you would have a taxable event on that ETH, and you'd have to pay on the gain that you have some kind of tax potentially on it. If you were not to need to do that, and instead you use derivatives, you would theoretically not need to sell and then avoid that situation, because you're able to actually use this as a tool to better manage your exposure without having to actually get rid of your assets. So that's another huge angle. Obviously, you should talk to your local tax advisor. I'm not giving any tax advice on this. I'm simply saying that myself and a lot of traders use these derivatives as tools to optimize that kind of exposure.
Right. So I think what you're saying is efficiency is the sort of key foundational stone here for sure.
Yeah, capital efficiency, where and leverage is a tool. You need to be extremely careful when you are trading on high leverage, because especially if you're trading on something like, I don't recommend people trade above even like 5x leverage, to be honest. Statistically, it's quite silly to trade at higher than 20, 50x. Like if you're trading at 50x or 100x, then a 1% move is going to, in the wrong direction, is going to screw you over. Which, if you look at the noise of an Ether chart or Bitcoin chart, you can see very quickly that it has those moves. So it's like you're statistically going to lose if you do that. So I would recommend that people trade with a modest amount of leverage. So use that capital efficiency because that is important, but don't get abusive with it and don't be reckless when it comes to leverage.
Yeah.
Sure. And so I guess what is most exciting for you about the current markets? Obviously, some people get excited when more institutions are jumping in. Others, it's just about that kind of retail or the innovation of products that's happening. What is it that keeps you going in the space 10 years on?
The most exciting thing for me, which is a bit paradoxical, but the most exciting for me is to see how high fees are on Ethereum, because this is purely a function of use and adoption. Like, people wouldn't be paying those fees unless there was value to utilizing the chain to do it. And it's the same. I was going to mention this in the beginning, but I assumed there would be an opportunity later to get deeper into it. But so we saw the same exact thing in 2017 with Bitcoin. And you could either sort of look at it negatively. I try to look at things positively in general in life. And if you look at Bitcoin fees back then, there was like $200, $300 just to move around value on the Bitcoin blockchain. It was extremely frustrating, obviously, if you were paying those fees. But at the same time, it was like validating this whole idea that a lot of us have been pushing for a while, that like this permissionless value transfer mechanism is extremely valuable. And Ethereum takes it to the next level. Like, it's not just moving, something from point A to point B, but it's much more than that, with like the different building blocks that Ethereum's put together of DeFi, where you are able to do all kinds of lending, leveraged trading, trustless swapping of assets. A lot of the key stuff in finance that makes everything tick. And there's all kinds of profit to be had in these markets. And so that's why we have Ethereum fees now. I'm paying more in Ethereum transactions than I was in 2017 in the end with Bitcoin when it was at its worst. And I know, and it's in a way it's crappy, but in another way it's super reassuring, because it's so exciting that the markets are this heated that it's able to sustain these high fees for so long. And the other thing is that this isn't a problem that is like unsolvable. There's a lot of really good projects like Leverage and the Gluon layer 2 network that has been put together, which are real solutions to these problems, right? So I am excited that people are using Bitcoin and Ethereum and other chains so much that fees are so high, and I'm excited that there are real solutions to address this and to have a scalable architecture which allows us to do all of this cool DeFi stuff, but in a way that's affordable for anyone in the world really to be using. Because right now it does feel a bit gentrified in a way on Ethereum, where sure, if you've got tens of thousands, if not hundreds of thousands of dollars, it's easy to justify a lot of these fees when you're spending hundreds per transaction. But it would be nice if this really was accessible, because that's part of the story of crypto from the beginning. Is we want to make things, we want to bank the unbanked, get people able to use these things where you don't have to make an application to the bank and hope that they accept it or anything like that. None of that stuff's necessary, right? We just have a permissionless ability for people to get going when it comes to all kinds of financial matters. So I hope that wasn't too roundabout, but that's what I find exciting in the current market.
Yeah, no, it's pretty cool. And I think you mentioned a couple of things which certainly everyone's noticed and has really changed the landscape, which is around the emergence of DeFi. So, DeFi has become a big force, and it didn't even exist, I guess, prior to 2019. When deep in the bear market, people started building all these very interesting decentralized finance applications on top of the Ethereum blockchain, and it just exploded from there, right? And as you rightly said, there's just so much innovation going on that every day we are seeing more and more and more of it, which is also driving, of course, all the gas prices up and questioning the economics of the Ethereum chain, so to speak. There's a small sort of associated question that I do want to ask you, Swap, and just want to get your viewpoint on this. Is so with this rising gas costs, as you rightly said, there's sort of success on one side, validation, but on the other side, there's also a lot of doubt, where people are saying, "Hey, will Ethereum survive this? Right? Is this going to be the end of Ethereum, and people will move to the other chains? Is this something that will question the whole foundational economics of DeFi? Right? It's painful to just pay so much transaction fee. What is your view on it? And how do you see? Are people going to move off Ethereum? Is layer 2 really going to take off? Is that going to be the next big thing, and therefore the network effect will stay? Like, what's your take on it?
Yeah, I mean, I have a similar feeling about Ethereum now as I did with Bitcoin in 2017. Like, the fees aren't something that should be seen as negative. Bitcoin's come a long way ever since then. It's not that difficult these days, actually, to transact in an economical way on Bitcoin, and the network effects and the you could say the virgin birth of Bitcoin, this immaculate conception or whatever you call it. This is you can never take that away from Bitcoin, and that's, I think, always going to make it the sort of like the king. And I think Ethereum has a similar sort of feeling when it comes to this whole alternate chains that have more smart contract scripting abilities, which is, I mean, this is something that I've been convinced of since 2016-ish. So I think it was sometime in 2015 or so, where I think you guys had Bharat on on your last episode, where I met him and started to talk a lot about this. Like, me and him talk a lot about philosophical stuff, and just always trying to think about the future more deeply when it comes to Bitcoin and crypto. And at the time, I was helping him to work on a sort of semi-decentralized Bitcoin futures platform, which was called CoinPit at the time, which, I mean, it was not super decentralized. It was using basically like a 2-of-2 multisig. So you basically were in control of your funds, and then you only move them into this 2-of-2 multisig when you wanted to actually place a trade. And at the beginning, it was a cool idea, because every movement of funds, like if you say you had one Bitcoin in your wallet and then you wanted to trade using just 0.1 Bitcoin of margin, then you would basically place the trade, and then it would move 0.1 Bitcoin of margin into this 2-of-2 multisig, so that if the exchange were to disappear, you could still basically generate a special key that would allow you to get the funds out in the event that the exchange was unresponsive or whatever. This was meant to help mitigate the issue we were talking about before about hacking and stuff like that. But I mean, that was fine when Bitcoin transfers like that cost like 20 cents, 30 cents, or whatever. But it very quickly, even in 2016, as the exchange was launched, and especially going into 2017, it became clear this was not economical on Bitcoin. So we had to start looking at, okay, why not do this on Ethereum? Because Ethereum's obviously not as many people are using it. It's much cheaper to transact, and there's actually a lot of cool smart contract functionality on it that can be used. And yeah, so we were wanting already to think like, how do we do CoinPit on Ethereum? And that's what Leverage is. Leverage.io is like, okay, this is the attempt to do this on Ethereum. But like, as soon as we were starting to talk about how to do it on Ethereum, we were like, okay, I mean, obviously Ethereum is going to run into the same problem, right? So this isn't something that came to us as a surprise just recently this year or something. In the very beginning, Bharat and Nirmal, the CTO of CoinPit, which is now Leverage, like, everyone was basically acknowledging, okay, we've seen that Bitcoin on the hadn't scaled very well and led to a fee market that rose. Ethereum, the same thing's going to happen. As soon as it gets popular, as soon as it catches on, it's going to have the same situation. So that turned what would be a sort of simple futures exchange project into something much bigger. It was like, why don't we build a whole layer 2 system on top of this, which the futures exchange would just be one sort of application on this layer 2. And that's what started really what Gluon is now, and Leverage as we understand it, which is using this sort of Gluon Plasma approach for allowing people to trustlessly trade futures with a very centralized feel, in the sense that you get very fast order book, you can create and cancel trades without paying chain costs and everything like that. So this is something that we knew going into it, and that's why it's so great now in the past year, seeing how popular everything has gotten, and the understanding from people within the Ethereum community that this is only going to work with some layer 2 solutions. And that's what the contribution that the Gluon has made to the community is. Here is one of, well, now there's many different layer 2 solutions, but
right.
here's the solution that we have of how people can do stuff like trading, easily transferring ETH and ERC20 tokens to one another. Here's how you can do it in a very economical and efficient way.
Yeah, that's really impressive that you guys had that foresight, but then also the engineering talent to be able to actually pull it off and bring that to market. That's definitely one of the things that I most like about the Leverage project, is that full depth, both on the financial side and the technical engineering. One of the questions that's come through from the audience does relate a little bit to Leverage, and you touched on it as well when, even from early days of BitMEX, liquidity, trusting that Perpetuals can have that depth of liquidity and the funding rates and order books and everything around it sufficient for it to be a kind of efficient market. What are some of the ways that you see that evolving for Leverage specifically? Are there ways to bring more liquidity or to encourage both sides of those order books and trading participants?
Yeah, that's a great question. I can't see any. I'm not on the YouTube thing, so I can't see the exact question. So whoever asked it, that's a good question. This is something that, I could also talk at length about, because liquidity is the most challenging aspect of building any of these kinds of products, because the mathematics and the risk system design and everything, all of that is pretty straightforward. Once you've sort of like figured out how the system works, implementing that from a product perspective, and if you've got great engineers like Bharat and Nimal and Benny and others, like they can implement that very straightforward. Like once it's spec'd out, boom, you've got it. But then it's just like if you build like a fantastic nightclub, right? You can get the most amazing singers going there. You can get the most amazing aesthetics everywhere, and you can put as much money and talent and everything into it. But if nobody shows up, it's not a success, right? If nobody is there, then you're not going to get patrons that want to go. Like they don't want to come to an empty club, which is the analogy that I use normally when it comes to these things, because in futures you can have like the coolest products. You can have like DeFi index, you can have like a top 100 index, you can put whatever you want together, and there isn't really much help if somebody who opens the exchange and wants to make a trade there, and then they see, oh, there's barely anything in the order books. Then like all that effort was kind of like, okay, well, there's not really much to do there, right? And I've dealt with this throughout my career, like since the beginning. And I've worked with like unregulated and somewhat regulated exchanges and such. Always liquidity is the problem, and the solution normally is you got to engage market makers and you got to incentivize them in different ways, and really without establishing those market making relationships. And a lot of the times certain exchanges they'll even incentivize them with like equity. So if a market maker has options in your exchange, then they're going to be more willing to provide liquidity, not just because that's what they do. That's like the business that market makers do. They quote at a spread and they make money over time, but they'll also be aligned with the success of your exchange. So that's one approach. Another that is that people just sort of pay a stipend to market makers and hope that they are going to meet the criteria that you set out for them. But the best is when you, I think, reach like a virtuous cycle where you have enough traders coming there who want to actually buy and sell. Like they're providing what's called the flow in the market, and then you have market makers who naturally enter to take advantage of what the flow creates. So they're wanting to jump in order to capture the orders that are flying in and out, which is sort of like the typical like retail flow and institutional liquidity relationship that creates a healthy market. Some exchanges have cracked that nut a bit better than others, but I mean, overall, it's extremely challenging, and you need to have both the sort of flow people that are just trying to they want to take a punt long or they want to take a punt short, and you also need the liquidity providers that are, assuring that the nightclub is packed for more people to come and enjoy the nightclub, basically.
Good one.
Great. Well, with that, we're going to jump into our rapid fire questions. So I'll bring each one up on the screen and try to answer them as quickly as you can. You ready, Swap?
I think so. Is this like a psychologist test, or how does this work?
You'll find out.
Rapid fire.
Great. Which of these would be your first choice to trade? NFTs or Bitcoin Perpetuals?
Bitcoin Perpetuals.
Very good.
No NFT craze there?
I love NFTs. We can talk more about that after if you want.
Okay.
In one sentence, sorry, were you gonna?
Yeah, no. What's common between 2017 and 2021 bull run?
There's a lot of things. So I want to precaution and say that there's a lot of things that are very different, but the commonality is the FOMO. Like we saw on Dogecoin from retail, there's definitely a lot of this, like people talking to their barbers and they're telling people to buy Ripple and shit like that. A lot of the same themes are happening now as happened back in 2017, but I don't think that it's going to end the same way.
Great. Now, everyone's been holding Bitcoin and ETH and hoping it goes to the moon. What are some interesting new opportunities beyond the majors? What would you tell your barber?
I would tell them to get into DeFi, get exposed to DeFi. I wouldn't really like start shooting off a bunch of shitcoins to them because they would get overwhelmed. But I would, just anything related to borrowing and lending, trading spot, trading derivatives. This is the future, right? Of like not just transferring value on chain, but creating and rebuilding aspects of the financial system in crypto.
That's awesome. Fourth question. Complete the sentence. DeFi makes.
DeFi makes a lot of people a lot of money.
That's true.
Yeah. Great. And last, in less than 60 seconds, what would you tell a new trader?
I would tell a new trader to not overtrade, not to use too much leverage. Like I said earlier, if you're going over 5x, you're likely doing something wrong. Like reassess yourself on that. I would say respect Bitcoin and Ethereum. Like don't get full in on like, oh, this shitcoin is going to be the next Ethereum or this shitcoin is going to be the next Bitcoin. Don't get too caught up in that stuff. Respect the king and the queen, and make sure that they're really more dominant in your portfolio long term. And I would say be careful which exchanges you're trusting as well. Don't get scammed.
Good point. Okay. Well, this has been a fascinating conversation with you, Swap. one last one that we definitely want to touch upon is NFTs, since we just sort of graced through it, and I know it's the talk of the town. So tell us in a couple of minutes, what's your take on NFTs? Where do you think it's headed? And what do you think is going to happen there?
So NFTs, I think it's an interesting topic because something I've chatted about with many people in the trading community. I know that a lot of people are triggered by NFTs. They think, oh, what a scam. I can't believe that people are spending, $1 million for this pixelated JPEG, which is stored on the blockchain. And I understand why people get triggered by this. Don't get me wrong, because if you're if you're not involved in holding this stuff or having exposure to it, then you're mad because you're not making money when these things are skyrocketing in price. So all I would really advise people when it comes to this topic of NFTs is even if you don't understand it, it doesn't mean it doesn't have value, right? It's just like art in general. Like, I was sharing some various works of art over the past 50 years, which have sold for like 50 million, 100 million. Some of this most bizarre modern art stuff, which to me, I don't understand how the stuff has any value. But the fact that there are multiple people trading these things and establishing that there's a historical increase in the value, you really need to respect that. You don't just deny. It's similar to if in any market, when there's a lot of successful people building up projects and selling them, and that they're establishing good value, you don't just deny it and say, "Oh, that's a scam. That doesn't make I don't understand it, so it's got to be a scam." I would say just embrace it, and it's not a good look if you're basically just angry about people making money. You should be happy that people are making money. Try to understand the market and why they are making money, and see if you can make a contribution to it. That's the most constructive way that you can approach this kind of thing. I have been skeptical of NFTs because, I've actually supported artists in crypto for years. Mm-hmm. And I think it's a great, I love seeing some of my artist friends being able to basically, even though it's just a JPEG or whatever, right, that's the thing people say, oh, I could just copy paste this and I stole your NFT. Well, that's not the case, because an artist that has used their private key on Ethereum or Bitcoin or whatever and mm-hmm. signed the transaction which creates the NFT, and it's basically like them signing and proving that this is really their work of art, and that's better. This cryptographic signature that they put on it is much better than just someone. You can forge art, real art, very, very well, and forge the artist's signature. You're not going to be able to forge though the cryptographic signatures on an NFT. That is rock solid. So I am not a huge NFT guy. I have some exposure in various projects, which I won't specify because I don't want people to get too excited or think that I'm shilling anything. I have very minimal NFT exposure. I love artists in crypto. I love supporting them, and I'm really happy that they're able to finally have their day where they're able to do pretty well economically through this mechanism. So
that's true. Yeah, it's a very interesting sort of new economic innovation for sure. And of course, it's got its hype and it's got all its drama with it. So we'll see how it unfolds. Excellent. Well, on that note, Swap, we just want to thank you so much for coming to this show. I think it's been wonderful talking to you. As we mentioned early on, the idea is to have good content. And I think we truly learned a lot from you today, just from your experiences and just talking about everything that you've been involved with. From a standpoint of Going Elliptic, for the listeners, we'll continue to bring on some good guests in future. We had Bharat Rao, the CEO of Leverage.io last weekend, and then we've got Swap today. As I said, the crypto OG who's seen it all, so to speak, over the last decade. We'll have a bunch of other guests next on the following weekends. We are also going to have different types of sessions. These are really more around trading and crypto perps, as they're called. We did a chartered edition where we spoke about the markets and just looked at fundamentals. We'll perhaps do one more today. And then we'll get in the following weeks also deeper into protocols. So, we'll talk about the technology because technology is equally important in the space. It's a nice mix of sort of trading and technology. And so we'll talk about technology, and we'll talk about, the evolution of protocols and layer 2 and all the good stuff there. Okay, well, thank you for being with us, and see you all next week. And Swap, thanks again for joining. Enjoy the rest of your day.
My pleasure, Shaggy. Thanks for having me on. And thanks, Paul.
Thank you.